Good evening, I'm Liyana Hassanel. Welcome to Bizworld. The government believes fiscal space needs to be continued to assist those facing high cost of living through targeted incentives. Finance Minister Datuk Seri Tengku Zafrul Abdul Aziz said the country's fiscal position is better than last year, given the growth in economy and improvement in commodity prices.
For Malaysia, we have seen our second quarter numbers, preliminary numbers. It's a strong second quarter growth. And third quarter, we feel that the momentum will continue to be a growth for Malaysia, but you have to remember the base effect, right, of last year's third quarter. So for today, the numbers, the data are showing, obviously Malaysia will continue to be on track to achieve the 5.3 to 6.3%. We have factored in the slowdown in the US economy.
He was speaking to the media after launching the Employees Provident Fund iLindung platform. The government, he said, is also looking at ways to save money to ensure funds are channeled to those in need. Fiscal deficit target, meanwhile, is maintained at 6% this year. In the meantime, the finance minister said there are multiple targeted subsidy mechanisms that is being tested out concurrently over a few months to ensure its implementation is smooth once done nationwide. The prospects for renewable energy, RE engineering, procurement, construction and commissioning contractors are good as the government strives to achieve the target of RE generation capacity to comprise 31% of total electricity generation capacity by 2025. Affin Hwang Capital noted the government planned to roll out large-scale solar Phase 5 and was studying the possibility of allowing virtual power purchase agreements. However, the launch of the phase could be delayed to 2023 to allow most of the Phase 4 projects to kick off first. The Phase 5 tariff rate is likely to be higher to reflect that higher cost of solar photovoltaic PV panels. The virtual purchase agreement will allow solar energy purchase by Tenaga Nasional non-residential customers from a solar PV plant at an off-site location, with the electricity supply transmitted through the national grid. Malaysia recorded the highest foreign portfolio outflows in June at 5.4 billion ringgit, the biggest since March 2020. According to UOB Malaysia, this was triggered by outflows in both Malaysian debt securities at 4.1 billion ringgit and equities at 1.3 billion ringgit last month. This was also in line with emerging markets' capital outflows that were weighed by lingering geopolitical risks, tighter global monetary conditions and surging inflation. Looking at the debt securities space, foreign investors sold all but Malaysian Treasury bills last month. Government investment issues and Malaysian government securities recorded the heaviest foreign selling, taking foreign holdings of Malaysian government bonds down the most in 27 months by 4.3 billion ringgit to 229.7 billion ringgit as at end of June. Year-end target for the benchmark FBM KLCI has been lowered to 1,506 from 1,568 points. This as market sentiment stays weak with downside risks in the third quarter as the market attempts to price in the peak of the US interest rates. CGS-CIMB Securities said the market could be range-bound and rebound thereafter if concerns over rate hikes or US recession risks subside. Regardless, the brokerage sees upside from a potentially stable political environment in Malaysia post-general election, as well as the return of foreign workers, better than expected tourist arrivals, and easing of inflationary pressures. Overall, it expects the market to stay volatile in the second half of the year.
Passengers, kindly proceed to gate G6.
Crude oil prices settled mixed after last week's overall loss at China reported its first case of the Omicron subvariant of the coronavirus. Persistent interest rate hikes, talked by Federal Reserve ahead of another strong reading on inflation, expected this week sent the dollar to new two-decade highs, weighing as well on dollar-denominated crude. New York traded West Texas Intermediate WTI crude settled down 70 cents at more than $104 a barrel. London traded Brent crude was up 8 cents. Last week, the global crude benchmark lost nearly 4%. China's Shanghai city, which spent months in a tough lockdown earlier this year, has discovered an Omicron subvariant case. The discovery signals the complications China faces to keep up with new mutations as it pursues its zero-COVID policy. That's all the time we have for Bizworld this evening. I'm Liyana Hassanel. Thank you for watching and keep tuning in to TV3.